everybody, thanks for jumping on here with me today. My name is Cole Alt. Welcome to Project 700. What is Project 700? So basically, this is a little brand that I put together to help the general population, help millennials, help young people about financial stuff, mainly credit scores and how they work, how to use them, how to maximize them, how to use it to your advantage. I'll be talking about car buying, house buying, student loans, business loans, how to use your credit the right way, what not to do with your credit. We'll break down all the myths, all the different things that you hear that aren't true, what is true, how to use credit cards, all that kind of stuff. So let's just go ahead and jump right into it. A little bit about me. I actually work for a company called 700 Credit Repair. I'm the VP of Sales and Marketing there. Podcast is something that I've been wanting to do in a little video series like this for a while, just to help people for free. There's a lot of times that people hit me up, they need help, but they're not necessarily in the financial position to be able to pay someone to do it for them, unfortunately. So I'm limited on what I can do sometimes. So basically I started Project 700. It's kind of geared with our same branding, 700 Credit Repair. But this is my e-course and my free e-course where I basically will give it to anybody to help them out and to better themselves. But I'm going to be diving a little bit deeper into stuff throughout this podcast, and we'll have some people on here that like mortgage officers, realtors, car guys, bankers, anyone that uses credit and has experience with credit, or any kind of experts that I can put on here to help everyone out. I'm going to do so. So what's a credit score? Everyone has a credit score that has a social security number in America. It's weird how when you get it necessarily and who has a score and who doesn't. Most of the time whenever someone turns 18 and they buy a car, it reports to credit, or they open a credit card, it reports to credit. And that actually establishes the score and gets it started. Our national average, believe it or not, for America is 704 is our average credit score. So the reason I started this podcast and this video series is to basically try and get as many people as I can to that number. It's higher than I would think. You wouldn't think it would be that high. When I ask people and they guess, they normally think it's lower than that. So if you're not there, and you're tired of being less than average, this is going to be a great little educational series for you to help you out. So credit scores, you have three different ones. Everyone has there's three major companies that each one produces a score for you, and they're three completely separate deals. So first off, you have TransUnion. Second, you've got Equifax. Third, we've got Experian. Each one of those is going to give you a score somewhere in between 300 and 850 is the scoring range, 850 being the best and 300 being the worst. That's different for different scoring models, but for a FICO scoring model, which is what lenders use, this is the range, 300 to 850. These are three different businesses. These aren't government-owned agencies. They're not a part of the government. They're not like with the IRS or something. These are out there to simply make money. They're businesses. So they do this and they report and they have these to make money. It's just like anything else. So keep that in mind whenever you're using your credit and whenever you're thinking about credit, and with what I'm saying throughout this series. There's different scores. So a loan officer that pulls your credit, what they do is they pull all three scores whenever you go buy a house. They pull all three scores. They'll take a low score, a high score, throw each one out, your highest and your lowest, and then they'll use what they call your mid score to actually get you approved, to use your interest rates, all that. So there's a lot of something that where people get confused is they say, you know, I see it on Credit Karma, it says one thing, and then whenever I went to get a car, it said a completely different thing. The reason for that is you have FICO scores, which is what lenders use, and you've got Vantage scores. So if you go to a car lot, for example, they look at a FICO score. If you go to a bank and try to get a loan, they look at a FICO generated score. If you go to Credit Karma online, which is a site that doesn't affect your score to look at it, it's an online monitoring site, that's a Vantage 3.0 score. So it's a completely different algorithm than a FICO score. FICO score puts weight on different areas and different things, different ages, balances, whatever. And Vantage puts different weights on completely different regions and different parts, and weighs higher on this, weighs lower on this. So take that into account whenever you're looking at it in different places. The information on Credit Karma is great, but the score, it's not going to be the same algorithm and formula that a lender is using. So that's where you see your differences there. There's 5 different regions when it comes to your credit score, 5 different factors that they use to score it, the credit bureaus do. So the biggest and most important factor that I always tell people is the biggest thing that can hurt you and the most worst thing that can hurt you is your payment history. That's 35% of your overall score. So you have a big pie, there's, you know, it splits up into different things and different weights. So 35% of that pie, it comes into your payment history, how you pay people back. Anything lower than a 97% payment history is going to start to hurt you. So if you've never had a late payment before, I've seen people who are 720, they've never had any kind of negatives, no delinquencies, and they get one late payment from a credit card or miss their truck payment, and it'll drop them 150 points just because it's such a, it's only one thing. It's the first time, the only bad item on there, so it's detrimental. That's your biggest thing. So I always tell people, if you're going to be late on something, be late on something that doesn't report to credit. You know, be late on your phone bill, for example, or be late on your gas bill. Obviously, don't let them turn it off, but if we can avoid being late to something that's reporting to credit, like a car, credit card, house loan, whatever, that would be best. Next region, credit utilization. What's utilization? Utilization is your limit to your balance ratio. So whenever you have a credit card, let's say you have a $5,000 limit and a $2,500 balance that you have on there that you have to pay off, you would have a 50% utilization rate, so, or utilization percentage. That's your percentage for your utilization for your credit card. So that's 30% of your score. If someone calls me and says, hey Cole, how's the fastest way I can increase my credit score? I tell them pay down credit cards. If you've got credit card balances, that's the fastest way to increase your score. There's a lot of myths with 30% being the balance you want to keep on your card. So $1,000 limit, keep a $300 balance. That's completely wrong. 30% is good. That's a good place to start. If you're at a 75% utilization rate, work towards getting it to 30 is what I tell everyone. If you can get it down below 30, that's good. So 30% utilization is good. If it's a $1,000 limit and you have a $300 balance, let's say you get it to 30, next thing you want to work towards getting it towards is 10% is better than 30. The best percentage though, if you can pay it down to this each month, is 1%. So $1,000 credit limit, $1 balance. A person with a 800 credit score, they carry a balance of 1% each month. So if they have 100 grand in credit cards, they're carrying $1,000 each month that they have to pay. So that's just something to keep in mind. There's I hear a lot of bad information with that. But like I said, if you got credit card balances, want to get your score up, pay them off. Next region, length of credit. So for people like me, I'm 25. One of the things that holds me back is I don't have a very long length of history. My oldest account is my student loans. They're about 6.5 years old from whenever I went to school. So that's one of the things that holds me back and keeps me from getting to an 800 range. is just that 15% off that length of credit. Now, some ways to get around this: if you have a parent, loved one, grandma or grandpa, you can get added to a credit card of theirs that's old. So like if you have a grandpa that opened an Amex in 1990, that's a way to overcome that. I'm on one of my dad's, but I've bought 2 new trucks in the past 3 years, and then opened some other stuff. I try stuff out to recommend it to my customers, so that's another reason my age is off, but I could really get it there if I wanted to. Inquiries, new credit, that's 10% of your score, 10% of what goes into it, your weight. So what's an inquiry? Whenever someone checks your credit, so let's say you want to buy a car, you go to the dealership, they're going to run your credit score and shop it with a couple different banks probably. And whenever they do that, it hits you with an inquiry, and it shows whether they showed check TransUnion, Equifax, Experian. The bureaus, they allow for 6 different inquiries per month, or not per month, I'm sorry, that's totally wrong. Per 2 years, per 24 months. 6 inquiries for every 2 years is what each one allows. So total between all 3, you could have 18, but they allow 6 for each one. So just keep that in mind too. Credit mix, 10% of your score. So eventually, in order to get to the perfect score, the 850, they're going to want to see on there that you have, okay, you got a good real estate account, a good mortgage that's got a bunch of age to it and is old, that you've been paying on for 10 years or whatever. They're going to want to see a good credit card that has availability in the limit, money that you can spend in case something happens and you need some backup to pay your bills or whatever the situation is. They're going to want to see a good car loan that's paid off eventually on there, a good little small loan to the bank. That's one of the next things, that once you do have some good established accounts, you want to start getting that mix. I haven't bought a house yet. That's what my goal is for this year, is to get a real estate account on there. That's the other thing. These 2 regions, this one 10% and the credit mix is hurting me, and then my length of credit is what holds me back too. So those are the 2 things that I'm personally working on to try and get to the 850. I want to get a mortgage on there and start paying on that. That'll help me. But overall, to recap what all we said, average score is 704. If you're not there, watch the series. We're going to get everyone that watches this there. I promise you there's some stuff that I can show you and teach you. 3 different scores: TransUnion, Equifax, Experian. 5 different score regions and factors that go into it. You've got FICO scores, you've got Vantage scores. FICO are used by lenders and banks. Vantage scores are most of your online monitoring sites like Credit Karma, Credit Sesame, those free sites that give you a score. If I can help, let me know. Feel free to comment on this, or you can reach out to me on Facebook. I'm making this, and I'll be doing more of these videos and this podcast in order to, I want to try to educate as many people out there as I can. My goal is to try and help as many people as I can get their score up. This is something that's huge, y'all. I mean, this should really be a course in high school or college to help people out. No one really teaches about credit. If you're lucky enough, your parents show you. Luckily, my dad, he's a credit repairman. That's what he owns our company. He's been doing it for 13 years is how long he started our company ago. But I was blessed to be able to been told when I was 16, okay, here's what you need to do, Cole, open up this card to establish your score, start building it this way. A lot of people don't have that, so I'm a big believer on this is something that should be taught in school, but it isn't, so that's why I'm making this. If I can help in any way, just let me know. Again, my name's Cole Alt. This is Project 700, so thanks for taking the time to listen to us. We'll see y'all again.